Okay, Google, tell me about the Macd.
According to Wikipedia, MACD, short for Moving Average Convergence Divergence, is a trading indicator used in technical analysis of stock prices, created by Gerald Apple in the late 1970s. It is designed to reveal changes in the strength, direction, momentum, and duration of a trend in a stock's price.
Okay, thank you, Google. Okay, so basically, Google explained it pretty well, but basically, I'm a price action trader, and 80% of the time, I found that most of the results come from the few things that work, and that's price action. However, I found that it was very important to kind of understand what few indicators, what the most important indicators are that a trader can use to find particular changes and movements in a stock to help profit off of it. So indicators are important to understand. You can see how and where traders might be lining up, creating buying and selling momentum in your favor. So today we're kind of going to quick talk about the Macd histogram, sometimes called the PPO, the crossover histograms, and then we're also going to talk about the EMA. So first off, the Macd, the blue line, this little blue line guy, that represents the Macd line, and the yellow line, this little yellow line right here, represents the signal line. And when the blue crosses the yellow, so when the blue crosses the yellow, that's right here. I'll mark it for you. When the blue crosses the yellow, that is a bullish indicator and a buy signal. So based off this cross signal, you would have gotten a buy point probably about here, maybe about here on this day. So that's important to understand, that you can have a buy signal when the Macd crosses over from blue over to yellow, and then you can have a sell signal when the blue crosses over from the top to the bottom. So look, there's a little cross right here, and this is on the SPY daily chart. So that would have been right about here. So if you just basically only traded off the Macd and didn't understand price action or other technicals, based off just the Macd, you could have made a good 17, 18% on your money. So it's kind of important to understand that while these indicators are not the end-all be-all, they can be a tool in your toolkit to maybe check every once in a while to see if there's a trend that you can capture. So basically, let's check out Boeing, an example of Boeing, and look at the Macd right here. Macd, nice crossover. That was right here. And look, we only had one green day. And look, after that one green day, you could have taken profits, or you held through all of this. So basically, the Macd, it can be a whipsaw, is what I'm saying, as though it might cross a lot of times, and you might be holding it for the stock for a long time, because look, the Macd crossed over right about here. Oh, let's get to the oval. We crossed right about here. And look, we crossed right there, and that would have been a probably about 30% run from 170 to about 25%, so 20%. So it's important to understand how the Macd can kind of help you profit. And then what you can do is on a shorter time frame, you can see the Macd, there's a lot of flips. Look at this on the shorter time frame. This is the 1 minute. So what you can do is, if you want, you can right click on the Macd. And basically, to pull up the Macd, actually, let's go over that first. Let's cross this out. So look, no Macd at all. Go to the studies set. You can type in here Macd. You can click this, hit add selected, hit apply, hit OK. And there we go. There's our Macd. And you can right click on the Macd. And what you can do here is you can show breakout signals right here, show breakout signals. And what this is going to do is this is going to give you an up arrow or a down arrow every time the momentum is shifting. So as you can see, there's a lot of shifts. So you can't basically only trade off the Macd. You have to realize that this indicator, these are lagging indicators. They work after price has moved. That's why I'm a price action trader rather than an indicator trader. So it's important to also understand, though, the Macd, though, because they work much better on the higher time frame charts. As you can see, you got a buy signal right here. And look, you would still be in this Boeing trade even after a long while. So look, Macd cross, that happened right about here. And look, you got a nice igniting green bar, and then you would still be riding the momentum in hopes for a trend continuation. This can also be shown on Roku. Roku is a great momentum stock. And as you can see, this is on the weekly chart right here. So each candle represents a week. You got one cross right here. So you would have bought somewhere about right there. And look, you would have held Roku all the way throughout all of this until right here. Look, we get a down signal, and look, where does this line up on the chart? This would have lined up maybe about this red day, maybe this red day. So based on your entry, based on the MACD, this is why focus on the bigger time frames for something like MACD. Look, you would have captured about a good 213%. If you're conservative and want to go for the smaller one, 146%. So MACD, it's important to understand. I would not recommend it for the smaller time frame charts, but for the longer time frame charts, you can see that it holds its trend. Look, the MACD never crossed over until here. And look, sometimes you get whipsaws, you get a quick buy signal, then you get a quick sell signal, and sometimes those can result in losses right here. So look, we got a cross right here, and that lines up with right about here. And that crossed down, but look, Roku actually went up while the MACD oscillator went down. And then look, you got a buy signal right here. We got a crossover. And look, you would have bought on this week. Yeah, you had about a good week or two to collect some small profits. But then look, another MACD crossover. So it's important to understand that this is a lagging indicator, and this can create some whipsaws. So the big takeaway that I've kind of noticed from trading over the years, kind of noticing the MACD. I used to trade the MACD in my first year, and we'll get into a story about that a little bit later. However, so look, the basic takeaway is, does this look like the top part of a circle, or does this look like the bottom part of a circle? Look at this. Does this look like the bottom part of a circle? The bottom part of the circle. Don't go based off, you can go based off the crossovers, but if you want to be a little bit early, you can go, does this look like the bottom part of the circle? And that would be right here. And then look, does this look like, oh, here's the circle, lines up right there, about. And then look, does this look like the top part of a circle? The top part, the semi-sphere of the circle. And that would be right about there. And that means you would exit right there. That would be a nice gain from here to here. And look, another top part of the circle, it looks like another peak. So look, basically, if you want to take the MACD to the next level, does it look like a peak or a trough? Look at this. We got a nice bottom part of the circle right here. This represented a bottom in Roku. Sometimes it doesn't always work out. Look, this looked like a bottom of the circle. That was right here on Roku. But we eventually had to have a virus crash, and so that created this big drop. So be sure to keep an eye out for that. And then the next indicator we're going to talk about, so let's clear the MACD. So now we just have a nice clear chart. Let's clear the drawing set. And so the next indicator we're going to talk about is, let's go to the 5-minute, and we're going to talk about moving average exponential. Move av exponential, and you can click here, add selected, apply, and there we go. And look, I'm going to quick remove, right click, remove the signal line. So basically, the moving average exponential is basically the blue part of the MACD line. So basically, the EMA, the exponential moving average, it takes the average of the price and then it adds it all up, divides it by the time that the price took to get that price, and then it creates this line, this nice blue line. And basically, the signal is above the EMA, or the exponential moving average, and the trend is still up. Once it goes below the EMA, the trend is down. So as you can see, the trend started moving down on Roku. This is just on Friday. Once it was below the EMA, once it was above the EMA, it resumed an uptrend. And just like the MACD, you can get a lot of false crossovers. So since it's a momentum indicator, the tighter that you have the exponential moving average, the more whipsaws that you're going to get. So what we can do is we can actually edit the study. So this is tight. And let's first show the breakout signals. So that'll show a green arrow for every time it's up, it crosses above the EMA, and a red arrow for every time it crosses below. So look how many whipsaws there are here. Even if we go to a daily time frame, look how many whipsaws there are here. But if we can loosen up and capture bigger trends, so let's change this EMA, right click, edit study. We can go to a bigger trend, maybe let's try like 12 or let's try 15. So look, 15, a little bit less crossovers. So there's a few right here. You'd buy up here, you'd sell right there. Small break-even trade, you'd sell right there, then you'd buy right here. Another break-even trade. However, if you just would have bought right here, you wouldn't have sold all the way till here. So you're basically trying to cap it. The looser you set your EMA, the more of a trend that you can capture. So yeah, the looser you set your EMA, the longer you can ride a trend. And it's important to use multiple time frame analysis when you're using these EMAs. This is basically riding trends and following trends if you aren't fully keen or if you're a bit new to price action. So a bit of a story is back in the day, I used to wait for the MACD to come all the way down. Let's actually pull up the MACD. You can type in MACD, we add study, apply. And back in the day, my first year of trading, I would always buy when the MACD would cross and we'd get above the EMA, and then I just keep on averaging down. And this was great. This created a 90 to 95% win rate and was making me about $200 a day. So I kind of asked myself, why did I stop doing that? Well, because that type of strategy with EMAs and MACDs and all that great stuff. And we'll talk, and I also use the RSI. We'll make a video about the RSI, Bollinger Bands, and accumulative distribution in another video. But basically, this 90 to 95% win rate that made $200 a day, it's great. But the thing was, especially with trading options, is that 5 to 10% of the time that were losers, they had no basis when to cut. And so there wasn't really that trade management aspect with it. And with options, that's not a viable strategy, and you can potentially blow your account. So be careful with this kind of strategy and kind of just use this as an eyeball indicator. And what I've found over time is use the longer time frame analysis. Look, you could have bought Roku right here, sold Roku right here, bought Roku right here, sold Roku right here, bought Roku right here. You would have rode Roku for a very long time before this time when it eventually crossed over. So that's a quick analysis on the MACD crossover, PPO, momentum. Keep an eye, watch out for the peaks. If you want, buy at the bottom of the circle, sell it when it's at the top hemisphere of the circle. You can rely on the crossovers if you want a little bit more confirmation, if you will. But yeah, that's kind of the gist of it. And in the long run, you'll find that price action will be king, but it is important to understand how these indicators work so that you can see where traders are lining up. So thanks for tuning in. Let me know if you liked this video. Let me know if you didn't like this video. That's my feedback indicator. And yeah, let me know if you want to see any other types of videos. All right, thanks for tuning in. See ya. Bye.